As the second largest retail bank failure in U.S. history just happened, the dominoes are still falling and the results are getting scary. This means that 3 out of the 4 biggest bank failures in history just happened in the last 2 months, and the bingo board for the banking crisis is starting to fill up. Let's talk about this. Well, I'm sure you heard about it by now. The FDIC shut down First Republic Bank and sold it to JPMorgan Chase. It gave the huge bank an extra $13 billion with no risk. JPMorgan Chase is breaking the law because it has more than 10% of all deposits in the U.S. as of right now. So why did this happen? And what does this mean for me and you? In a way, it smells like corruption. The FDIC took bids, supposedly, on the First Republic Bank in just a few hours and then gave the whole bank to JPMorgan Chase. The speed with which this decision was made makes me worry about backdoor deals and not doing enough research. The Rigo-Neo Interstate Banking and Branching Efficiency Act, or HR 3841, signed into law by President Bill Clinton in September of 1994, should have stopped this purchase dead in its tracks. Yet because the banking contagion is spreading fast, it seems that all sound banking policies is thrown out the window at this point. This act stops banks from controlling more than 10% of U.S. deposits. This is to stop monopolies and other kinds of abuse within the banking sector. But it looks like the FDIC has thrown the rules out the window with this shady deal. So what does this mean for you and other regular customers? Ultimately, kind of feels like a bailout by the people once again. For example, when you pay your monthly bank account fees, you are basically giving JPMorgan Chase a $13 billion bonus for buying First Republic Bank. Instead of doing a thorough investigation and putting the bank in the hands of a receiver, the FDIC let a shady deal happen behind closed doors with no one being held accountable. The First Republic Bank disaster follows a similar pattern of shady acquisitions by JPMorgan Chase during the last great financial crisis. It is eerily similar to what happened to Washington Mutual in 2008. Back then, no one was held accountable, and it's likely the same thing will happen again today, leaving customers in the dark while the banking ball try to focus on taking care of their own at the expense of the people. So what can we do when it seems like corruption and lack of accountability are ruining our financial system? How can we be sure that our money is safe when banks keep making risky choices and regulators keep ignoring it? The failure of the First Republic Bank should be a wake-up call on top of the other bank failures that's already happened that makes us think twice about the banks that hold our hard-earned money. Will we ask for change, or will we keep letting these companies do whatever they want? That's the big question we need to ask ourselves this current moment. So as things continue to unravel, no doubt the bankers are scrambling and trying to keep this thing somewhat contained, but the cat's out the bag. People realize the system is coming down. And like I always say, you can't give a financial advice, but I hope that you only keep within their possession the amount of currency you'd be willing to lose. And we all know FDIC is not sitting on that much to assure everybody to make them whole. So continue to get your weight up, because that's the best way to reassure yourself that you'll be in good hands. That's in your own hands. Share your comments down below. We'll talk about this later. Enjoy your day.